a very, very interesting trade. It's a very, very interesting trade, and I want to just show you it here. And it's this one here. It's the euro dollar against the pound and against the Aussie. Now, the pound and the Aussie obviously are higher betas than the euro, which means the euro might lag behind, but obviously we want to make sure the euro is not the leader, because obviously the weight of money behind the euro could obviously sink the pound and the Aus. So one of the things that we watch, of course, is we can see that in this example here, we can see that the pound is going higher. We can see the Aus at the bottom panel is going higher. The euro in the middle panel is roughly about neutral. So everything's going higher just now. Everything's going higher. Everything looks about right. And then all of a sudden, the euro ends up at the bottom edges. The pound is at the top edges. The Australian dollar's at the top edges. So whilst the euro's at the bottom edges, obviously there is a fundamental reason for that. That's the vaccination program in the eurozone is still crumbling. Basically, there's still serious issues. People struggling to keep control of the European situation with various more lockdowns announced. And it's just a bit of a mess just now. So there's going to be reasons why we've got discounted euros. But at the end of the day, if this is going to be true, this would offer us opportunities to sell sterling. Well, you'd imagine that when sterling's making new higher highs up here, there would have been a big activity increase, but there wasn't. Think about it. If this euro is more than just the euro storyline, there would have been a big activity increase in the pound at the top print. There wasn't. Because of that, we're thinking to ourselves, you know what, this looks like a buying opportunity on the euro down here into this stop run. So we could look at trying to pick up some bids down into this bottom edge. You can see big activity, but that's obvious because it's a stop run. But obviously, if it rejects that stop run by going higher, then that's a buying opportunity. And sure enough, the price takes a bit of time, but does go higher. And then we see the pound starting to print some pretty serious liquidity. As the euro fails to make new higher highs, the pound starts to find activity. Now, what probably is there for that trade? Well, probably some buyers on the euro there, and then probably offset by some sellers on the pound there, which means that the net position must have been a short pound. Oopsie, the net position must have been a short pound into that trade there against a long euro, from that bottom edge there. So obviously, as a net position, that's obviously made a lot of money. It might just have been profit taking. Obviously, it could have been profit taking. You can see that we got the same activity in the Australian dollar. The euro carries on up, the pound carries on up, the Australian dollar carries on up to the top edges. And then obviously the euro goes all the way back down to the bottom edges again. All the way back down to the bottom edges. Runs the stops. Now remember, in the background, there's no selling on the Australian dollar. And there's really no selling on the pound either. So this drive down into the stops on the euro could be a nice opportunity to pick up some euro dollar again, depending upon your overall view of risk in the markets. But we know that the S&P's been pretty solidly bullish from the get-go today. So that's giving you an idea that that might be a bit of dollar negativity coming in. So why not take a pop at some euro longs again for a second time? And you can see the stops giving you the activity that you need to start bidding into the bottom edges again. And yet again, we can see that the euro takes off an absolute crackerjack. It's a beautiful trade, isn't it? Absolutely beautiful trade. Two bottom edges, two stops, two straight lines across the charts, two stop runs, and all you had to do was work it. All you had to do was work it from those stories, and that's why three charts on one chart is a good idea at times, because you can start to recognize, certain activities at certain locations that lead to some pretty phenomenal little outcomes. I mean, it's not a big outcome, but it goes from 55s to 80s. 25 pips of profits, which is pretty good. And, super sensational, guys. As I said, it doesn't matter what it is you're looking at, 1 from 3. It could be liquidity, it could be order flow, it could be block prints. But the idea that, everybody does business in this linked environment at the same time. Everybody does business on the bonds, the 5s, the 10s, the 30s, the ultras, the 20s at the same time as each other. Well, it's the same true of the Forex markets, because if everybody's doing business on the dollar, that's going to be impacting on the euro, the Aussie, the pound, and so on. So you would expect to see crossovers in terms of activities, wouldn't you? Now, obviously, that crossover of activity can show up on the dollar, it can show up on the euro itself, but we just look for it. If we look for it and we start organizing our thoughts around that. Now, sometimes you don't get anything because of the fact that there's no big volume surges. You can obviously adjust your settings for like holiday periods to see if anything does show up. And obviously, if you adjust your settings, you might end up with too many. You might end up with too many volumes showing up on your screens. You might not end up with anything, but sometimes it just lines up perfectly for you. One of the charts that we do look at is the order flow on the likes of the bond market on a three chart basis. And if we look at the order flow in the bond market, we can start to recognize, I keep it on 2 markets, the ZB and the UB, and I keep it away from the ultra bond, and this is what it looks like. So I'm watching the order flow in the ZB and the UB. This is, sorry, the ZN and the ZB, sorry, my mistake. So very, very mindful of the order flow in the ZN, middle channel, ZB, bottom channel, and the UB, top. So obviously in line with the order flow, I'm always looking for the order flow giving us any type of read into certain locations, especially when the ZN and the ZB line up in terms of order flow. So you can see, for example, into the low price here, you can see that the order flow is lining up into the bottom edge of the ZB contract. However, there still seems to be selling initially into the ZN contract, driving the prices down a little bit here. So into that selling, you can see that the selling continues to push the price down into the lows. The divergence on the ZB order book, the divergence then on the ZN order book gives you the opportunity to buy the UB contract at that stage into these low prints here. And that was that trade we've just been talking about as well. We did it here with the 20s, the 19s, and the 18s. We did it here with the 20s, the 19s, and 18s. It's now traded 28. I suppose everybody is long bonds, yeah? I suppose everybody got it the second time after we'd already mentioned it the first time. It's a good trade, guys. So that's twice we've taken bonds off that price area there. Twice we've managed to make stops at break even. Twice we've managed to make profits. And that's good. It's a good trade.